In this lecture, I will highlight some pros and cons of cryptocurrency trading. So there are many good reasons why cryptos are the perfect asset for trading and investing. But as always, there are also some drawbacks. And traders and investors should know and understand the drawbacks before. So let's start with the pros. And first of all, and most important, crypto prices are highly volatile. And in trading in general, you can only make profits if prices move, and high price volatility can lead to high profits and high returns. Next, cryptos are liquid assets, at least the most popular ones like Bitcoin or Ethereum. And the general rule is the higher the liquidity, the lower the trading commissions and the spreads. So later in this course, we will see that managing and controlling trading costs is an important aspect in trading. So the lower the costs, the better. Now, compared to forex trading and popular currency pairs like a US dollar, euro, the liquidity for cryptos is still lower and the trading costs are higher, but the volatility is also much higher. And taking into account volatility and trading costs, then crypto trading tend to be more promising than forex trading because the much higher volatility outweighs the higher trading costs. Next, the decentralized blockchain technology is secure and can't be manipulated, and is also highly transparent, which is definitely a pro. And we have also learned that cryptos are not issued by authorities like governments and central banks, so prices can't be controlled or manipulated by authorities. And as an example, why fiat money can theoretically be printed without any limits, leading to high inflation rates, there's a hard supply limit for cryptos. So, for example, for the Bitcoin, the hard limit is 21 million coins. Next, traditional assets like stocks, bonds, and fiat money can only be traded when markets are open, and markets are typically closed on weekends and bank holidays. But in contrast to that, cryptos are tradable 24 hours a day and 7 days a week. Then we will see in the next sections on Binance that it's pretty simple and straightforward to start trading and investing cryptos, for example, Bitcoins. So you just need a few mouse clicks and a few dollars or euros or whatever. Then another aspect is that many brokers and exchanges offer derivatives for cryptos like futures, options, or CFDs. And these derivative contracts give traders more options and more flexibility for their trading strategies. And finally, some experts say that the age of cryptos has just begun, and we will probably see a very long-term trend in price appreciation. But of course, that's just one opinion, and there do exist opposing views. So let's have a look at some cons. And volatility is actually a double-edged sword. So high volatility can lead to high profits, but also to high losses. And even more severe, prices can easily be influenced or manipulated by individuals with a single tweet. So that's not that easy with traditional assets or currencies. Next, even if the blockchain technology itself is secure and unhackable, so the digital wallets and exchanges are not 100% safe, but that's a general problem and not only a crypto problem. Now, there do exist a lot of scam websites out there promising high profits with the cryptos and stealing the money of the traders. And that's why traders should go to reliable websites and providers. And Binance is one example here. Another aspect is that Bitcoin and cryptos are the currency of choice for criminals and criminal activities. We have learned before that the blockchain technology is transparent, but if you are not a tech geek, then it's complex and hard to understand. So in my opinion, as a trader and investor, you don't necessarily need to understand all the underlying technical stuff, But at least you should trust in that technology, and if not, you shouldn't trade and invest cryptos. Next, we have seen that crypto prices can't be manipulated by central banks and governments, but that's just a rather one-sided and extreme view. So central bank intervention is not all that bad, as it can help to stabilize the markets and prices and correct extreme market forces. So cryptos are exposed and kind of left alone to market forces, and that's why individuals can heavily manipulate prices with a single tweet. Now, the Wild West times are over, and crypto brokers and exchanges are more and more forced to comply with existing rules and regulations. And that's the reason why the regulatory environment is in flux. So, this means that the providers and their offered services and products can change or can be restricted from one day to another. And of course, changing rules are not that great for traders. And we will see that and the consequences in the sections on Binance. Last but not least, cryptos being a long-term trend is just one opinion, and there are opposing views expecting the crypto bubble to bust somewhere in the future. And again, these are just two extreme views, and the truth could lie somewhere in the middle. So these are some pros and cons of crypto trading. Thanks for watching, and see you in the next lecture. Bye.